Hey everybody, Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to Pro Trader Tips for today. Today we're going to focus on a strategy within our Delta Neutral Breakout publication. You know, we're in the heart of earnings season right now, and earnings are coming fast and furious to us. So we're looking today at trade ID 1406. This was sent out last week for our subscribers on Decker's Outdoor. All right, Decker's is often a volatile stock, so that we did a long strangle on the stock. And let's go ahead and take a look and see what we're working with here. So the alert went out on January 29th, and this was a long strangle on Decker's. Now, the thing about straddles and strangles through earnings is oftentimes they can get pretty expensive, but the returns on them are equally as impressive. All right, so here we had a debit of about $1,700. This would be a case study that goes out in our Delta Neutral Breakout high value portfolio, and really is only appropriate for accounts over $30,000. Okay, because we're trying to risk as little as possible. And here, for every single contract you trade, as far as every single strangle in this example, it's $1,770. Okay, so it does get a little bit cash prohibitive for smaller accounts, but here we have a nice particular trade. And as you can see, Decker's was in a nice little rally mode here, and came up. And a lot of people would say, you know, they would look at a chart and here and expect, oh, this stock, man, through earnings is just going to shoot higher because, you know, there's good news out there. This stock broke out. You can see in the lower left-hand corner here, the earnings icon from the previous earnings. The stock gapped up, had a little retracement, retraced the gap, and then just, you know, rallied from 164 to 220. All right. Well, let's see what happened through earnings. All right. And this is one reason why we like doing strangles, because the alert came out, okay, to go ahead and exit at $28.82. So the entry was at $17.70. The exit was at $28.82. Let's take a look at the risk graph here. All right, that was a return at the time of the exit of $1,118. Okay, that's a 63% rate of return. In literally 2 days, it says 1 day on our platform, but our cycle is 24 hours. So we went 1 day, and then if I took it off within 24 hours of the next clock tick, then it considers it 1 day. But effectively, all in all, in reality, it's 2 days. All right, and you can see here the stock drop. In fact, after the alert went out, the stock kept dropping and dropping and dropping. So people were able to make profits. I even saw, in fact, if you waited one more day, there was follow through to the downside, and this trade actually doubled the return. So over $1,700 in return if you had a little bit more patience. But I was looking for the gap. You can see the stock gap down. It says in red here over 15%. So almost 16% at the time we took it off. Stock closed down on the day. I believe it was around 17, 18% on the day, and then had follow through to the downside on the following day. So all in all, this trade yielded a return of $1,112, okay, for a 62.82% rate of return in just 2 days. All right. So that's the power of breakout strategies around earnings. For these stocks that consistently make big moves, this is the type. You want to do straddles or strangles only if they have a history of moving big through earnings, and be consistent about it, and you can see returns like this too. That's our Pro Trader tip for today. Everyone have a great trading week, and we will see you next time.